Nancy Tengler is Chief Investment Officer at Laffer Tengler Investments, and Richard Weiss is Chief Investment Officer over multi-asset strategies at American Century Investments. Wonderful to see you both. So, Nancy, 5% GDP growth to me feels like it's now catching up with what the market's already been telling us. So the market seemed to be betting on all along we were going to get this stimulus bill. Now we've got it. Are you surprised we're not selling the fact?
Well, that's a great question, Kelly, because that's often the case. But I think what investors are seeing is not just optimism from the stimulus bill, but corporate earnings growth, reopening, and just generally that stocks, while they've run quite a bit, will begin to be supported by earnings as we go into 2021. So there's a lot to be optimistic about. There's still a lot of uncertainty. I think we get our sell-off in the first quarter when we start to transition to the new Biden administration, and not for political reasons, but just because it's always been thus, that when you get a change in the White House, stocks kind of recalibrate. So I think we're ending out the year with the Santa Claus rally, yay for stimulus, and then we'll begin to see some sort of correction in the first quarter.
Rich, we're looking at kind of the end of the calendar year phenomenon, also the Georgia Senate runoffs that are looming. So more and more people are asking a question about whether that's going to kind of become the tripwire. But as we know with this market, it climbs the wall of worry, right? If we're already asking if Georgia's going to be a tripwire, then maybe it's not going to be. I mean, what are the real risks around that event, and what do you think is likely to happen there?
Well, sure. As far as Georgia is concerned, maybe it's a tripwire, but it's a very low one. The betting sites all have the Republicans taking the Senate. It's a 3-1 underdog for the Democrats to take over. So I don't think that's the real issue here. All along it's been three things, right? The virus, the vaccine, and the stimulus. And the real tug of war here is between the virus and the vaccine. I think the market's appropriately priced in, as far as we know, a mid-year or maybe third quarter time period for reaching herd immunity. And then it's presumably back to normal in 2022. So we agree with Nancy. In the near term, definitely some room for disappointment here. Virus mutations or the dissemination of the vaccines, some delays or snafus. But looking out, as the stock market always does, 6, 9, 12 months, we see a brighter future.
Nancy, let's talk about what that means sort of strategy-wise, investment-wise. The NASDAQ is up 15% this quarter. I mean, it's just astonishing. But we do turn into this January effect where people start to get those 401k inflows coming into the market. And, you often kind of get a little bit of a continuation of the recent trend. So tactically, what should people do here? Do they rotate? I mean, look, even energy. Look at the move we've seen in energy already. So what's your best advice?
So I'll just tell you what we're doing in our portfolios. We like stocks that are connected to the consumer. Consumer free cash flow is at historic highs. With this new additional stimulus, we think you'll get saving in the early days, but people will begin to spend the money. So we like consumer stocks that are embracing digitization. So in the restaurant space, that would be McDonald's and Starbucks. In retail, it's Walmart and Target. And then Roku and Square are another way that we think you play the consumer improvement. And then, the PPP loan portion of the stimulus bill is very important because, as we all know, small business is the driver, the engine for job growth. So that adds into our thesis on consumers. And then lastly, we think you'll continue to see increases in CapEx, which will improve productivity. I don't hear a lot of people talking about that. I think that is going to be one of the things that keeps inflation muted as this economy takes off in 2021. So we like a lot of the software tech names. I know a lot of people are coming out and talking about hardware, but we still like some of the cybersecurity names and the data aggregators. And so we're overweight in that segment as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.